the demand for silver and gold has picked back up in a strong fashion over the last few weeks. It was very slow for a period of time after the banks failed. So you had this lull between June and July and August, very quiet summer doldrums, they call it. But indeed, as we see more talk about bank downgrades, U.S. credit downgrades, getting close to, of course, today be the beginning of the BRICS meeting in Johannesburg. There's a lot of newsworthy items that have sparked people's interest again. While premiums haven't taken off yet, they've certainly stabilized, and yet stabilized at rock bottom, the lowest I've seen them in 4 years. You couldn't ask for a better environment to accumulate gold and silver in terms of availability, price, and premium against the backdrop of a world that seems to be going upside down.
BRICS blocks strategic success. The BRICS economic bloc's expansion to include major oil producers like Saudi Arabia, the UAE, and Iran signals a strategic win for China and Russia. As these global oil giants join the fold, it's seen as a counterbalance to the declining influence of the G7. This move reshapes the economic landscape and strengthens the influence of non-Western powers. BRICS embrace local currencies. The BRICS leaders emphasize the importance of promoting local currencies in international trade and financial transactions. This declaration, made at the end of their annual summit, underlines their push to reduce reliance on the US dollar, marking a significant step toward a more multipolar world. Venezuela's call for economic change, President Maduro of Venezuela, underscores the need for a de-dollarized global economy, advocating for a new financial system to counteract the impact of U.S. sanctions. Maduro's message to BRICS leaders highlights the shared need to create alternative settlement systems using national currencies and new tools for a multipolar financial landscape. Eastern nations challenge gold market. Eastern nations are disrupting the West's traditional dominance in gold pricing. A surge in gold acquisitions by Eastern countries has led to a shift in global gold dynamics. Covert acquisitions by central banks, robust private demand, and increased gold exports to Asia have propelled gold prices upward, potentially altering its dollar-linked status. In these dynamic shifts, global economic dynamics are rapidly evolving, with new players and strategies reshaping traditional power structures. Don't forget to join us as we explore the unfolding events. Now let's continue our enlightening discussion with Andy Schectman.
Is that bull markets go higher than anyone ever thinks possible, and bear markets fall further than anyone ever thinks possible. And when I started in this industry, you're right, silver was maybe even under $3 an ounce, or right in that neighborhood, and gold was, sub 300. And the Dow Jones was 2,100 when I started. The Nikkei was almost 40,000. Japan owned Rockefeller Center and casinos in Vegas, and they owned ski resorts in Colorado and whatnot. They were taking over the world. They made things with an engine or a motherboard better than anyone in the world. And here we are, after all of these years. The Dow Jones went from 2,100 to over 35,000, and the Nikkei went from nearly 40,000 and fell all the way down, lost over 75% of its value. It's crawled back up a bit, but still hasn't reached where it was at when I started this business. And, if you would have asked people back then, they would have said Japan is taking over the world. The first conference I went to, there was a man laughed off the stage for saying the Dow Jones would go to 10,000. And yet, when we look at the performance of gold and silver, the one thing that it has lacked is this instant gratification quality that so many people seem to think is so important, or actually maybe just the way things are nowadays, where in a very short span of time, your crypto portfolio can go up 10x, your equity portfolio can double or triple, as can your real estate holdings. So this is not the way that it's ever worked in my experience. This is a phenomenon that is part and parcel due to a massive increase in the money supply and suppression of interest rates over the last several years, and the fallout from that is this new expectation that this is indeed how markets work. But when we look at the performance of gold and silver over those 33 years, certainly it's been the tortoise, not the hare. But when you look at how they have performed, they've done exceedingly well, and they have maintained purchasing power, no question about it. And when you see silver at $3 and at one point it was 50, now we've obviously crawled all the way back to half of that, but even still, it's up eightfold from when I started this business. And when you look at gold at 250, 260 to where it is right now, up 8 or 9 times, it is not about this massive, quick gain in value. It's about this slow and methodical maintaining of your purchasing power. Certainly, in an environment where the West has tried to suppress interest rates to maintain an illusion of prosperity, stepping on the canary in the mine shaft, that being gold and silver, was certainly a necessity. But you can only suppress a market for an extended period of time by pushing it in the direction that it is going. And that's why it was so easy for the West to hold back the price of gold and silver in the U.S. market heyday. The question is, are we leaving that environment? And I would argue we are leaving that environment. So, gold and silver will have its moment in the sun. I just wonder if the environment that it comes along with is something that maybe we should be careful about what we are wishing for. But I look around, Chris, and I see things that are making me very nervous about this economy. Certainly we can talk about it. But to me, gold and silver have never been more important. And I think the one thing that people need to focus on is less the appreciation and more about its 5,000-year history of maintaining purchasing power over time. And while you may not see it or become frustrated by its lack of movement in relation to what would be the narrative or the environment, it seems counterintuitive, it seems frustrating, and it is, yet the most sophisticated, well-funded, well-informed traders on the globe are rushing into it, the central banks and the commercial banks and the sovereign wealth funds, and they're doing so in a preemptive fashion because I think they too see what's coming as a result of the huge distortions that were created over the last several years, easy money and low interest rates. So I know that's a lot more than you bargained for when you ask that question, but it's important to understand that I guess if I would encapsulate it in one phrase, it would be that bull markets go higher than anyone thinks possible, just like the Dow Jones, and bear markets fall further than anyone ever thinks possible, just like the Nikkei. And gold and silver and the rest of the environment that we talk about week to week are no different. They're just something that more than anything has become frustrating. And I understand that. I do. I've dealt with it for 30 years. But in the end, it always seems to cross the finish line, even if it was in the respect of the tortoise, doing it way slower than we would have liked. It's there when you need it. And it has a weird way through all of these years I've been doing this of maintaining its purchasing power, maybe even accentuating it a bit. So have strong fingertips, hang on tight, everyone, and trust your gut. In the end, you'll be right.
India's Prime Minister calls for global crypto framework with focus on unified approach, adoption, democratization. UN Secretary General Antonio Guterres calls for reform of outdated, dysfunctional, and unfair global financial architecture. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.